join us right here. They're together right now. Larry Young, the CEO of Dr. Pepper Snapple. Bob Gamgort is the CEO of Keurig Green Mountain, which has been a private company for the last couple of years, at least, closing its deal to be acquired by JAB back in March of 2016, but now coming back to the public markets. We're going to spend a lot of time with you, but let me start, Mr. Young, with you, because the decision you made to sell the company to a certain extent on behalf of your shareholders, along with your board of directors, why? Why was this a good deal? Why is it a good deal for your shareholders?
It's a fabulous deal not only for our shareholders, but our consumers, our customers, and our partners. We talk a lot about being a total beverage solution. This was the perfect avenue to take us to where we're not only in cold beverages, but also in hot beverages.
So what does that mean, being a total beverage solution?
In any category, they're changing very quickly now. Beverages are moving fast, they're subcategories. We want to make sure that we're there every minute, wherever you're at, anytime, any place.
And Mr. Gamgort, I guess a similar question to you, because I've spoken to a handful of people this morning as well who say, well, on the face of it, I don't quite completely understand what the benefits of bringing these two companies together. I understand what Keurig does, I understand what Dr. Pepper does, but I wouldn't necessarily have seen them together. What are the benefits?
Yeah, and I think that's actually part of the excitement about this, is it's not intuitive at first, but as people learn about it, they're going to realize that this makes total sense. When we put these two beverage companies together, we create a North American beverage company of scale, $11 billion in revenue. We cover all consumer need states. We get exposure to high growth areas. And really importantly, we've got a distribution system that can get those brands to customers anywhere they shop. I don't think there's anything quite like it.
Now, the distribution set, I mean, we all know Dr. Pepper trucks, for example, DSD, delivering to small stores and stores all over. But how does Keurig benefit from that delivery system? You don't deliver that way right now with Keurig, do you?
No, that's a huge benefit to us, because if you think about how beverage brands are born, they're born in small outlets, vending, convenience, where people buy them one bottle at a time. That's hard to do. You need a very, very sophisticated distribution system. That's exactly what DPS has. So we're able to match that with our strength, which is in traditional grocery, but we also got a terrific e-commerce business. Among CPG companies, we've got one of the biggest exposures to e-commerce at Keurig. The combination of those two allows us to get to anywhere consumers are shopping.
Larry, you've been committed to making shareholders money for as long as I can remember. You came on Mad Money, said the same thing. Carbonated, it still has a place in the universe, huh?
Absolutely. I look at what we've done in the last 10 years, and I get so excited about the next 10, and that's why I want to be a part of it. Not going to just go away. I'm going to be on the board and make sure this thing really goes out to the best that it can be.
All right, and Bob, I think people don't know your history. I mean, you were at Mars, Pinnacle. You've always wanted to build the ultimate consumer products company. This is it, isn't it? This is the way. I mean, we look at a Procter kind of stalled, a Colgate not that great on Friday, Unilever trying to figure out what to do. Your background is such that you may be creating the big one.
Yeah, I love brands, and I love being able to reach consumers. The beverage category is an incredible category, but there are pockets of growth that are faster than others. This allows us to put together these two businesses. Carbonated soft drinks give you scale. That pays for the infrastructure that allows us to take emerging brands out to all consumers. And let's face it, one of the fastest growing segments in beverages right now is coffee in all forms. We deliver it in hot. We're the #1 player in retail coffee. Now we can get into cold as well.
Hey, Larry, I'm interested in what you said about subcategories and the way we're slicing and dicing some of these brands. We got some more from one of your competitors here this morning. How long can that go on? And do you envision a day where carbonated is once again higher than non-carbonated in terms of volume growth?
Well, I think, like Bob just said, the carbonated soft drinks will always pay the light bill. That's a big, huge piece of the business out there. Gives us the opportunity to play in the others. I think we're just starting to see the start of the subcategories. Look at all the innovation that's out there today. The beauty of both our systems, we don't have to own them. We will partner, we will license. We'll be there playing in that category.
And is that flavor or packaging size or both? Something else?
All the above.
Let me get to the financials a bit here, Bob. Sure. So, investors right now are trying to understand, well, what's the stub equity going to be worth? What am I paying for this thing? $600 million in synergies. How many years to get there?
3 years.
3 years to get to $600 million. You put in $9 billion, obviously, in new capital. But give me a sense as to the growth rate. Is it going to increase as a result of this deal? So people can try to understand a multiple that they're willing to pay for the earnings.
Sure. The $9 billion is new equity that's coming in from JB and its partners, an investment on there. The current exposure to the categories in which we participate today, we estimate to be a growth rate of about 2 to 3%. We're always conservative on the top line side. We know we have complete control over the cost side of things, which is why we put a hard number on that. But if you looked at where the portfolio sits today, you're looking at 2 to 3% growth. But we think over time we've got the ability to drive that into higher exposure to faster growing segments.
I mentioned capital as well, but you're also increasing debt. You're going to be at 4.5 times levered. Is that roughly
higher,
right?
It would be higher than that. But what I would point out on the Keurig Green Mountain side, 2 years ago, we were 5.5 times levered. We're now down at 2.7. We paid off $2.5 billion worth of debt in less than 2 years. We've got a great ability to drive margin, but manage our cash flow in a way that pays down debt rapidly.
And what are you going to do now that you're going to have a currency? I mean, is there an idea here that you would use it for future deals as well?
It absolutely gives us optionality to look at partnerships in a different way to be able to expand that portfolio. Having a public company currency certainly allows you to be a bit more creative at times.
But there had been a question about how steady Keurig really was.
Yes.
And if you remember, there were a couple of shortfalls, a lot of the shorts going against it. I guess it turned out to be a pretty great business. Huh?
It is a fantastic business. It is driving more than 100% of the growth in the coffee market. We continue to build household penetration every year. When we started, we were in 17% of households. We're in 20 today, and we just got started with innovation and marketing. We believe the upside is close to 50% of households should have a Keurig system in there, and we own that system. And we have 75 brands. All the brands you know and love participate in that system.
Yeah, I had Dunkin' today, Pete's yesterday. I love it.
And variety is one of the largest benefits that our consumers talk about coming into the system.
Although those other coffee brands that JAB owns, they're not a part of this, correct?
They're available to us to expand through partnerships, correct?
Yeah.
But this is Keurig and Dr. Pepper Snapple getting together.
You guys have a name, by the way, for this thing? What do you
Keurig
call it?
Dr. Pepper.
That's what you're
Yeah.
going with? Keurig
Wow, I
Dr.
like
Pepper?
that.
Two great brands.
Got a nice ring.
Keurig Dr.
People
Pepper.
like the double
KPS.
names, Dr. Pepper Snapple, Keurig Green Mountain.
Kraft
It's
Heinz.
like combinations making a combination. right?
Absolutely.
Yeah.
Although the people who like Snapple are going to be sad, I guess. They're losing that.
And Green Mountain.
Yeah.
Best-selling pod,
Best-selling pod system is Green Mountain.
Green Mountain.
Wait, is this Green Mountain? Huh?
It is.
Wow.
But we're right up there with Starbucks and Dunkin' Donuts and Pete's are all in the top
But in terms of
5.
flavor,
We didn't talk
flavor pod,
Flavor would be breakfast blend.
breakfast blend.
Breakfast blend, Green Mountain.
I got to get on the case.
Gentlemen, thank you both
Thank you.
for enlightening us on this deal this morning, of course. Appreciate it.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.